Hello YouTube, this is my second attempt at recording this. The one I did last night didn't come out great. So we're going to do a new one. It's 2026 now. This is my 2025 portfolio roundup, investment roundup for the year. So I think, and we'll start with just showing this number, that nice number, 27.20%, although I feel like a lot of people beat the market this year. But vaguely my investment style, I've been reading, Intelligent Investor, Snowball, Berkshire Hathaway letters. I read Peter Lynch's What Went Up on Wall Street, right? So it's vaguely the idea, but also I'm in my 20s. I have a higher risk profile. I understand growth companies. I have a degree in software engineering, so like tech companies and stuff I feel very comfortable with. So it's trying to blend those. But anyway, so yeah, this year we're up this much. We do have more assets than this so Robinhood, when I got Robinhood Gold, gave me $1,000, 0% margin, which I just used on a very safe asset, Verizon, which we'll get to. And then during this dip and this dip here, I used another $1,000 of margin on each one. So right now I have $3,000 of margin taken out. There's no real chance of a margin call unless there's a market crash of more than 66%. And even then I have more cash I could deposit. So I think that's important. They're saying this one's a margin account. This is taxable, blah, blah, blah. I have a high yield savings account with Robinhood too, which is just a cash account that I stuff money into. There's 700 cash in there. There's 300 coming in, 1,000 total. It's earning 3.25% interest, I think. Yeah, 3.25% interest, way more than my bank gives me. My bank would give me that on a CD. Robinhood, I can move the money in and out. So I keep some money back up here as reserves for buying dips, or if I have to withdraw for, I have 2 credit card payments the same week or something. And then I also have a retirement account with Robinhood. I don't know why it's bugging out. Okay. So this I started later in the year. There's not as much money in it. And I made some mistakes in this account. So this account's only up 6.8%. It's been up to 20%. But we cut. So this was ASML. I bought a lot of ASML. And it did great. And then I sold it at 950. And I bought into some other stuff that has not done so well. And that's a problem I've had in this account, is because it's tax free, I'm a lot more willing to sell my winners. I had ASML in both accounts, and I held it on my taxable until $1,000 higher, $100 higher, because I was like, oh, there's going to be a 20%, 30% tax if I sell this, whatever. But here it's 0% tax. So I did it earlier, put it in bad stuff, and it went badly. There was a point here where we were back to break even. Another thing is talking about the macro stuff that helped me when money went in. Oh, there is also, I have Roth from work. So that second Roth 6.83. My taxable's up about that much. The one I have from work's up 16.38. I had that money before, I have it after. It's this much now, 4,300. So in total, we have about 22 grand invested. And all of this was this year, this 17 grand, really 14 grand if you don't include the margin, right? Yeah, just this. So that's what we've tucked away this year. We're around 4,000 invested at the start of the year to having 22,000 invested. So I think that's been good. But anyway, I feel like knowing that account exists and how it's done is vaguely important to the financial picture. But yeah, let me pull up the picture of the portfolio. I think this is going to be the easiest to understand. There's some things I've sold completely already that aren't in here anymore. ASML's not in here, even though that was a big part of the story, and we'll get to it later. But right now I have Nvidia and Amazon. These are my big bets for next year. I entered these positions recently. I thought they were at good prices. I think if I can get these, I know people are like Mag 7 never have value, but these are companies I know are good. And for me, I'm willing to lower my required margin of safety. I still thought they were undervalued, but I don't need a giant margin of safety because I know Amazon's a great company. Nvidia, a little less. I do really like Nvidia, but it's fundamentally a cyclical industry, so I don't know where it's going to be in 5 years. But next 2-3 years, I feel pretty comfortable with Nvidia. I think there's a lot of upside this year. I think that could go up 30-40% comfortably. Anyway, gold. I bought gold at the start of last year, betting on inflation, betting on de-dollarization, and it worked out really well. Silver would have been better, but my gold is up a lot. One of my biggest winners for the year. Google, another one I bought when they were super low at the beginning of the year. Like the moment I learned how to value companies, I was like, Google's value is stupid immediately, and I bought a ton of it, and it worked out well. Verizon, I bought with that 0% margin. It really, in reality, all of it's bought with margin, but in my head, that I bought with that 0% margin. I was looking for a really safe investment that was going to pay for my membership fees to Robinhood, and Verizon did. Berkshire Hathaway, safe place. If the semiconductor market crashes, Berkshire will be good. Berkshire, I think, will beat the market, even though I'm probably going to underperform my portfolio. Uber, I'm making a big bet on. I'm going to be adding to that. That's my biggest loser. My biggest loser for the year is Uber so far, I believe. But we're down a lot on them, and I'm adding to that position. I believe in it, but not like totally. I'm not as confident as Uber as Amazon. I don't think Uber's ever going to be up here, but I might move it up above Berkshire. Might keep adding. Meta, I made quick 10% on. Its value was stupid low, but I don't like the company, so I'm looking to sell that position whenever I feel like it's a good time and move it into a company I more firmly believe in. I'm not going to hold Meta shares for 5 years. Not at all. So AMD done great, doubled my money on them, bought it like the perfect bottom. I'm just holding. I still like them. Their valuation looks worse than it is. Lifetime Holdings pickleball stock. I actually think they have really great numbers. That's a bet for next year. I have a little bit of crypto. We'll talk more vaguely about this now as we get into the smaller positions. International ETFs. This one's a Europe one. This one's an India one. This is East Asia developing, Australia, India, Middle East, whatever. EWI, that's South Korea. That one's done amazing. They've all done great. All of them outperform the US market. EWC Canada, another one. I feel like Canada's going to benefit a lot from US pissing off its trade partners. People are just going to trade with Canada instead and get similar products. And then DXJ, that's a Japan one with only exporters. So there's less exposure to yen being an awful currency. They make their money in dollars. So this has greatly outperformed Japan's regular indexes, and I like it. I'm going to be adding money to all of these. I bought them early in the year. They used to be like 20% of my portfolio, but as I've added elsewhere, they've shrunk. So I'm going to add money, get it back up to like 14, 15%. Some defensive stocks. UNH, I'm looking to get out of. McDonald's, I want to get out of, and I want to put those, especially McDonald's, about early in the years, like a recession-proof stock. It's gone flat. I got paid dividends, but there are better places for that money that I think are also good. I'm probably going to move it into Fiserv and JP Morgan, honestly. And probably the same with UNH. I like these companies. Anyway, and then there's some lottery tickets. So TMC done well. It's a deep sea mining company. A lot of these are not value investing. These are pure speculation. CRISPR done poorly. It's gene editing. I want to add money to that though, but I am down on that. Rigetium up a lot on quantum computing. IonQ down a lot on quantum computing. I just bought it different times. I wanted to have both to like hedge my bets. I wanted the room temperature one, the sub-zero one, but I got into IonQ later, so I lost money. But I'm fine holding it. I still like conceptually holding both just in case. Red Cat, I am going to get rid of. These last three are drone stocks. I bought 3 drone stocks, small drones. 2 of them done great, and Red Cat hasn't because Red Cat does shareholder dilution, which I didn't know at the time. They diluted shareholders 33% this year. Kratos is up like 40%, AeroVironment's up 20%. Red Cat would be up 30% of it and diluted shareholders, but I think I'll get a better opportunity to sell, but then I am selling. I don't want to hold that long term. Otherwise, and there are a few PayPal, great value. I'm going to add to Kava. I wanted to buy one of the restaurant stocks that dipped, and I feel like people really like them, and there's Kavas popping up near people, and they're really loving them. I hear people tell me how awesome Kava is all the time, unprompted. Marvell, out of all the semiconductor stocks, it was the only one I was really finding value in at that time of the year, and it's done well. And we can zoom out. I don't think we need to look at too many of those, but we can look at our biggest winners, biggest losers. So Google is probably my biggest winner. There was some in the retirement account. I sold that. I'm still holding in my main account, but we're up 67%, $500. But like $900 on that. It worked out great. Gold, I put almost $1,000 in the start of the year, up 39%. I was like DCAing it through the first half of the year. I've stopped now; it's too expensive. But yeah, we're up almost 40%, $370 on that. AMD, we've more than doubled our money, 115%. Nvidia, it's such a big bet. Even though I'm only up 5.5%, it's still one of my biggest gainers. Some of these were just up at over $100. There's been a dip the last few days, but anyway, we can go look down at the bottom here. We have Uber. We've lost $90 on. BYD, we've lost $42 on. That's another one I plan to add to. I don't like ADRs, China ADRs, but I'm willing to like dip my toes in and have some money in there. I'm also looking at JD.com for next year, but I haven't made that call yet. So I own some more Amazon here. That's done well. Like I said, there was ASML here too. So I think, yeah, there's also some losers here. PayPal, IonQ, CRISPR. PayPal I'm adding to. IonQ, I'm not. CRISPR I probably am. But I'm also going to be adding to a bunch of my winners, looking for opportunities to really buy any of them at a good price. And my idea of a good price, I've tried to nudge up, but none of them are quite there yet. Anyway, let's go look at some of these hidden trades, some of my bigger trades that have gone and disappeared from the record. Okay, so if we go here, ASML. So in my main account, you'll see I bought ASML at $660. I bought some at $800, bought some more at $800, and I sold at $1,050. But in the Roth, I bought at $755, $725, $705, and then I sold at $950, and that was because it was tax-free. And really, I wish I had held both of those just forever. I think ASML is a good hold forever company, and I didn't do that, and I should have. And the places I put the money after were worse. Let's see. And then a loser that you don't see, American Superconductor. I sold this position already. I just ate my losses and moved on. My thesis changed. Can I not see? And I can just show you the chart. 1 year. So I bought like somewhere around here. And my thought was like US has to upgrade its power grid. This is a local company that does high voltage power stuff. But I later found out they really weren't going to get any tailwinds from the power grid upgrade. And the stock had already crashed by then. And I sold and I lost $100 on that. But it's where I bought it at 100 PE and I didn't understand it. And that from that stock, I'm going to read the company's filings anytime before I make a purchase. Because they would have pretty quickly told me that in their own paperwork. Let's see. There was also crypto I think we should mention. So you'll see in crypto here, I'm down quite a bit, but overall I'm up. So early in the year, we can just look at the year. These numbers aren't really accurate in any way beyond the fact I'm up $360. And I was up more. I was up 800 at one point. I think I held too long, and then I sold and moved it into other cryptos and pulled money out. So anyway, I'm down on XRP and Solana, but Bitcoin, early in the year, it just actually, why is it showing Solana stuff? I don't know why it's showing other cryptos here. Anyway, so yeah, we were buying Bitcoin at 75,000. We bought some at 95,000, and then we sold at 102,000. Then we bought some more at 105,000 and sold that at 105,000. Awesome. But we bought like $250 of Bitcoin, made $70. And then there was also Solana. No, not Solana. ETH. Ethereum. We made a lot of money on Ethereum too. That's also, it doesn't show up in the diagram because I don't have any position in it anymore. But yeah, I was buying at 1,400, 1,600, 1,800, 1,800, 1,900. Bought some more 2,300, and then finally sold at 2,700. Made like $500. So we sold that. We sold like $1,500 of Bitcoins in Ethereum, and then I moved like 300-400 into crypto again, took the rest out and put into stocks. So that's why this looks weird. These are down. We're not down that bad on them. We're down 19% of some. What did I buy in at? 150. So yeah, I was buying like at this dip, and like around this is where I was buying, and we're down here now. But I'm sure buying here and here, I'll eventually make money back. I don't understand crypto fully, but I'm pretty sure that's a good enough price that I'll make my money back someday. And I can eat the losses. The crypto, if we go back here, anything red or white, I'm fully expecting could go to zero, but I think that overall they're gonna make more money than they lose. Okay, so is there anything else? So I guess for next year, I mentioned some stocks I'm looking at. I'm also looking at Aspen Aerogels to add to this red. I'm looking to increase positions. I'm sitting on cash. I'm adding to these international ETFs. I might add to Berkshire even. I do think Uber, PayPal are still good. It's hard for me to find value in the market, though. I think there will be a dip in another buying opportunity sometime this year, and I want a pile of cash. So I'm probably going to start piling up cash and maybe paying off some margin. I don't know. I feel comfortable with the rates and the risk of the margin. But yeah, if anyone, let's see, is there anything I forgot? I don't think there is. If anyone has any suggestions, comments, anything to say, let me know. If there's anything you'd want content on, there's stuff I could talk about. I could do book reviews, some of the books I read. I could talk about specific stocks more. I didn't really go into any analysis of any stocks, 'cause this is already a 15-minute long video. It would have been 2 hours if I analyzed each stock. Um, but yeah, I can do more updates. I can do whatever, but I just didn't think I wanted to type this up. So made a video. But yeah, like, subscribe, comment, whatever. I'd appreciate it if you want more, if you want to hear me at more, or if you want to like break down any of these companies, some of my weirder picks if you want to know about. If you want me to do a video on LTH or I don't know, MCore. Oh, MCore is another one I'm planning to add to. They build data centers, and I want to buy a full share. Their shares are expensive, but I really like the company, and they're back down to an affordable price, I think. But yeah, anyway, if anyone has anything, any feedback, anything, go ahead. This is my call to action at the end of the video. Bye.